Picture this. You're in a high-performance sports car tearing down the highway at 200 miles per hour. The engine is roaring, the adrenaline is pumping, and everyone is cheering for a new record. Then, out of nowhere, you slam into a brick wall. Total silence. That is exactly what the crypto market felt like over the last 24 hours. In the blink of an eye, nearly $1.7 billion, yes, that's billion with a B, vanished into thin air. This wasn't just a dip, it was a massacre. It was violent enough to do the unthinkable. Bitcoin, the king of crypto, just got kicked out of the world's top 10 most valuable assets. So what the heck just happened? How does digital gold get knocked out by an old-school oil giant overnight? Grab your coffee and sit tight because we need to talk about the great flush of 2025. Let's look at the damage. Bitcoin took a nosedive, crashing down to the low 80,000s. Now, to the average person, $80,000 still sounds like a lot of money, but on Wall Street, that drop was enough to slash Bitcoin's market cap down to about $1.65 trillion. And here's the kicker. On the global leaderboard of wealth, Bitcoin slipped to number 11. Who took its spot? Saudi Aramco. That's right, big oil just reclaimed its throne from big tech. But why did price crash so hard so fast? The culprit has a name, and it's every trader's nightmare: mass liquidation. If you're new to this, let me explain it in plain English. Imagine you want to buy a house worth $1 million, but you only have $100,000 in your pocket. You borrow the other $900,000 from the bank, hoping the house value goes up so you can sell it and keep the profit. That's called leverage. But here's the trap. If the house value drops just a little bit, say to $900,000, the bank gets nervous. They don't want to lose their money. So they don't ask you nicely, they force sell your house instantly to cover the loan. You lose your house and your $100,000 down payment is gone forever. That is exactly what happened to crypto traders yesterday. Thousands of people borrowed money to bet Bitcoin would go up. When the price dipped just a little, the exchanges acted like the bank. They force sold billions of dollars of Bitcoin instantly. This created a domino effect. Selling drives the price down, which triggers more selling, which drives the price down even further. So does this mean the party is over? Should you be panicking because Bitcoin is now sitting at the kids' table at spot number 11? Absolutely not. But this crash teaches us two critical lessons. Lesson 1, the leverage flush is healthy. Think of this like a forest fire. It looks scary, but it burns away the dead wood. The market had too many gamblers using borrowed money. This crash wiped out the weak hands, the speculators, so the market can reset. It's painful, but it's necessary for long-term growth. Lesson 2, the battle of old versus new. The fact that Saudi Aramco overtook Bitcoin is symbolic. It's a clash between the legacy economy, oil, energy, physical commodities, and the digital future. It proves that while crypto is powerful, the old giants aren't dead yet. When fear hits the market, big money still runs to what feels safe and familiar. But keep some perspective. Even after this crash, Bitcoin is still bigger than Meta, Tesla, and Berkshire Hathaway. The king stumbled, but he isn't dead. So the dust is settling. You're looking at red charts. What should you do right now? Number 1, don't be a hero. The volatility isn't over. Do not try to catch a falling knife by using leverage or borrowing money to trade right now. The casino is rigged against you in moments like this. Stay liquid, stay safe. Number 2, zoom out. This is where the smart money separates from the dumb money. Institutional investors, the whales, love these moments. They see a discount, not a disaster. If you believed in Bitcoin's value at $100,000, ask yourself, has the technology changed? No. Has the adoption stopped? No, it's just on sale. Number 3, stick to the plan. If you are a long-term believer, this is a classic dollar-cost averaging moment. Don't go all in at once. Buy a little now, a little next week. Smooth out the ride. History tells us one thing about Bitcoin. It has a habit of getting knocked down only to get back up and punch harder than before. The only question is, when it reclaims that top 10 spot, and it likely will you be celebrating or will you be regretting that you panic sold? The stock market is a device for transferring money from the impatient to the patient. Be the patient one. If you want to stay rational while everyone else is losing their minds, make sure you smash that like button and hit subscribe. We'll keep tracking the charts so you don't have to navigate this storm alone. Keep your head down and your standards high. See you in the next one.